Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. How you going? Welcome to the podcast. Thanks for joining us today. And Investor Stories is what we like here, looking at how other people like ourselves are navigating property markets with the objective of creating wealth where possible so we get choice in retirement. That's why most people I know invest in property. Some do it because they, inverted commas, love it, but I guess most people love the idea of having choice in retirement. So whatever floats your boat, why and how you're investing in property, that's a personal thing. We like to explore that on the Smart Property Investment Show. We've done it for many years, and we're fortunate to have many returning guests that we check in as people embark and go down this pathway of investing in property. One of them is Marissa Schulze. We haven't spoken for a little while. Marissa, how you going? You well?
I'm great, Phil. How are you?
I'm not too bad. Well, it's got to be 2-3 years, right, since we got together?
It's been a little while. It's good to be back on the show.
Yeah, no, it's good. And it's only grown and evolved since we last got together. We're sort of, getting well over 100,000 people every single month sort of tuning into this, which we get a bit of a kick out of, the fact that it gets that many downloads and is that popular with the community. And, it feels like every single person's a property investor in this market, doesn't it?
Well, it's definitely a good market to be investing. I mean, affordability is so good, interest rates are so low, rental returns are so good. So it's a great time to be in the market, I think.
That's cool. Now, remind me what you do for a living, Marissa.
So I run a mortgage broking business in Adelaide.
Okay. And how's the business of mortgages at the moment?
We have never been busier. I've never ever seen this sort of buyer demand ever in my banking career, and I've been in the industry for nearly 15 years now. I've never seen this level of demand. Got prices going up so quickly at the moment, but it's not only on the sales side, even on the rental side. All of our rental properties and all of our clients' rental properties, all the rents are increasing. It's a bit crazy, to be honest. We're seeing some really good growth both on the property value side and the rental side at the moment. So we're very busy in the business. We've been growing and bringing on new staff just to cope with the demand. And it's great to see that people are out there and feeling confident and wanting to upgrade their homes, wanting to renovate, wanting to invest. And it's great to see interstate investors being interested in South Australia as well, acknowledging the stability and the great returns we have here in Adelaide.
Yeah, great. And I want to sort of get into your journey, your story as a property investor. But while we're talking about mortgages, I imagine that's just linked with activity in purchasing and people, whether it's investing or for owner-occupier purposes. Is it easy to get a mortgage at the moment? How are you finding it? Investors have been challenged over many years. There's going to be sort of a relaxing in some of the requirements about lending. They're starting to soften the serviceability requirements. Is it easy to get a mortgage at the moment, or still a lot of rigmarole?
Look, I think every bank has different policies and a different way that they approve finance. But I think that it is generally easy for people that have stable income. And basically, it's the three, S's. So you've got the servicing, the security, and then your credit score. So they're the three things that you need to have to make yourself a good applicant for any bank. And I think, there are a few things that are making it easier for investors. And one of those things being that the servicing assessment rates are coming down as the interest rates go down. So that's obviously opening up affordability for people that maybe couldn't afford it when interest rates were a bit higher. And I think different banks are now starting to apply different levels of common sense. We still have this issue about living expenses, which I think we discussed last time I was on your show, Phil, where, there are some banks that are still scrutinising living expenses, but that can also work in your favour as an investor, because if you're the sort of investor that's really good at managing your money and is being quite careful in terms of what you spend your money on in the 3 months prior to applying for a loan, that can actually work in your favour to lower your living expenses on the application and actually increase your borrowing capacity. So I think at the moment, we're not really seeing that we have to turn away too many people, and we're finding that we can really find a solution for everyone that comes and wants to invest and wants to grow their portfolio. So sometimes we need to look outside the box, and that's what we have to do as mortgage brokers and just find solutions. But definitely we're finding that it's definitely, all the banks are open for business and they're ready to lend. Yes, you do need to supply an incredible amount of information and supporting documents, but as long as that you're earning an income and you've got a good credit history and you've got the deposit or the security to back up the application, then we're finding that there generally is a solution.
Mm. And how you going finding mortgage brokers? You said you're hiring people right now. Is it hard to find a good mortgage broker? Most mortgage brokers, good brokers, are out doing their own things, aren't they?
Yeah, we are very different at Rise Hire. So we probably are a different type of mortgage broker, a very nurturing and educating model that we've got. So we've grown by about 6 people in the last 6 months. But for us mortgage brokers, we grow our own mortgage brokers, I guess, if you like, because we're a bit different to other mortgage brokers out there in the market. And it's really important in our team for our mortgage brokers to be investors themselves, so that they've actually got first-hand experience and they actually practice what they preach. So that's a really important aspect. So yeah, I feel like there's always good people out there when you're looking for them. So I'm really proud of our team. We've got some really good people here. So very happy with all of that.
That's cool. We're going to take a quick break. When we come back, let's start talking property back in a moment.
Are you struggling to invest in property this year and need help buying? Then you need to book in a consultation with Investor's Dream and let us do the hard work for you. Don't fall victim to missing out on incredible deals like everyone else. Lock in a meeting today. Go to investorsdream.com.au and secure your financial freedom today.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Marissa Schulze, talking all things property. Just before we get into your portfolio, how's the Adelaide market at the moment?
The Adelaide market is on fire. So,
like the rest of Australia.
Yeah, that's right. I speak to real estate agents all the time and the demand opens is just incredible. Properties are selling so quickly and generally way above asking price. We're finding so many pre-approvals, so much buyer demand right now, and our clients are actually struggling to get properties because they're being snapped up so quickly and at prices above their budget. So all the signs are good and we have experienced some good growth. I think it's, in the last few months alone, we've seen 6% growth in Adelaide, which has been pretty good. And we're also seeing really strong growth on the rental side as well. So we're seeing rents go up too, and it's really hard for tenants to find rental properties in Adelaide at the moment. So everything is looking positive for property owners and property investors in Adelaide. But saying that, we've still got really good cash flow. And so there's still really good buying opportunities here, I think, for investors from all over Australia.
Yeah, and you're talking about 6% growth over the last couple of months. That's per the data houses, and a lot of that is lagging behind where the market actually is. There's probably a lot more than that, and that's where a lot of investors can get sort of caught up a little bit when they think that they can be buying property at a particular level because that's what the data, which has happened, says. But the reality is if you get a pre-approval on the basis that you should be able to get an X type of property, by the time you actually get into the market with that pre-approval, start buying, the market's probably moved quite a lot since, right?
Yeah, that's right. You do have to, in a market like this as a buyer, you do have to be quite aggressive and you have to sort of know what your limit is and know what sort of properties you're going for, and you need to have your finance sorted, and you can't sort of waste time and, procrastinate. You need to get in there, you need to make serious offers, and you need to close the deals quickly to be successful.
Yeah, I completely agree with you. Now, let's chat about you as a property investor. You mentioned you like brokers that invest in property, so you invest in property yourself. Can you sort of give me a quick sort of brief on your portfolio at the moment?
Yeah, so my portfolio is pretty stable as it has been. I'm a fan of the buy and hold strategy. So I've done some developing in the last few years with properties that I have owned for a number of years. So the portfolio is going up to just over 30 properties now, and it's going really well. So getting really good returns, and I've been able to spend the last few years maximising the value and the return of some of the properties that I've had for a while, and that's been great in terms of growing more equity and increasing the rental return.
So 30 properties, that's considerable. That's more than most. How long have you been at this, Marissa?
Well, I started investing since I was 18 and I've been doing it for a couple of decades now. Okay. So now I'm giving away my age.
So I won't ask that question.
But so I bought my first one at 18 and it's been nearly 2 decades.
Wow. And what's sort of the breadth of assets that you have in the portfolio? Can you give me some sense for where they are and what they are?
Quite spread out, but I generally have always bought properties with big parcels of land that I can add value to. So adding value to it in the sense of maybe a cosmetic reno or a subdivision or even a development. I've always bought things that I can add value to. So I've never really bought a brand new, and I don't really buy apartments or units. So I buy houses on land. And generally I try to look for properties that are really selling for land value. I see the house on the land just as a bit of a bonus to get me a rental income whilst the land appreciates in value. So generally I'm looking for, rundown properties that need a bit of TLC that I can add my own equity growth to above market movement and make some extra value out of it that way as well.
And can you give me some sense of your LVR position?
Well, look, because I've been doing it for a couple of decades and I've been doing the buy and hold strategy, I'm down to about 50% LVR. So that's a pretty good place to be. So it's looking after itself and it's, even providing a positive income. So that's a really good position for it to be in.
That's good. So it's positively geared even before the tax sort of implications are added, is it?
Yeah. And look, I have always been, I started when I was quite young. So I started when I was 18. I was working at Foodland at the time, earning $7 an hour. So I needed high cash flow properties from the beginning. So all of my properties have tended to be more high yielding properties with really good cash flow that would be self-supporting or at least self-supporting within the first 5 years of purchasing them with a little bit of improvements to them. So I've always looked for properties that can, be neutrally or positively geared, or that I can convert them into something positively geared in the future.
Yeah, it's a really good story. Go back and just Google Marissa Schulze on smartpropertyinvestment.com.au. Don't Google it, search it on smartpropertyinvestment.com.au, and you can go and listen to that podcast. Pretty detailed, and we go through that backstory and to get to sort of where you are today. I guess you mentioned that a lot of the assets that you like to acquire are properties on land that you can add value to, whether it's cosmetic renos, knock it down, rebuild, development. Where are your properties located? Are they mainly South Australian based, or are you right across Australia?
There's a mixture. So firstly, I only invest in metros, so I've avoided regional centres. So obviously a lot of my investments are in Adelaide, spread across Adelaide, so ranging from 3Ks from the CBD to 30Ks from the CBD, so quite spread out. I've also got a few properties in Tasmania because my husband is from Tasmania. So they're spread out as well, some near Hobart, some near Launceston. So just a bit of a mixture, but mainly those two capital cities is where my investments are focused.
Cool. And I want to sort of understand what the future holds for you, but let's go to break beforehand, back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of Smart Property Investment Show with Marissa Schulze, chatting through her journey through property and significant portfolio, 30-odd properties. Won't share with me the value of it, 50% sort of LVR position. So it's a pretty nice position to be looking for opportunities from. But what's the future hold for you, Marissa? Is that enough? Are you just going to pay down the debt and that's the extent of it, or are you going to keep at it?
Oh, look, I really enjoy property and I really enjoy property investing. So I don't think I ever really will stop. But I think that my portfolio is at a point now where I definitely have achieved my property investment goals as an investor. So it is at a point now where financially I don't need to continue growing it, although it's still a lot of fun. So I guess for me, it's just a matter of, seeing where the opportunities lie in the future. But honestly, Phil, I actually really enjoy helping other people to do what I've done. So it's also for me a matter of giving back now and helping other people to achieve their property investment dreams as well, which is what I love doing every day. So, but yeah, I think there is still more room to grow, but for me, it's also now about consolidation too.
And do you think people, when you first sort of engage them in discussions around property investment, they're more informed these days when around the opportunities through property investment? I know sort of after the GFC, Australians have become a lot more responsible with their money and really an understanding of how their money was invested, because a lot of them blew their dough through super funds and, the increase in stock market. So people are a lot more attuned to finance, and I think a lot more financially responsible as a result of that. No doubt COVID-19 will only amplify that. But, are people savvier these days than what they were 10 years ago?
I think that there's a lot more information available. People have access to a lot of information on the internet and through podcasts such as this one, and they definitely have the ability to be more informed. But sometimes I feel that for some people that can be quite overwhelming for them, because there's such an abundance of information, and sometimes that information doesn't always agree with other information that they've read, and it can be in conflict. And the thing that does concern me is that sometimes people use the amount of information available as a way to procrastinate their investment plans and then effectively, miss out on some good opportunities. So I think the key is to, yes, definitely be informed and educated. And I think one thing that's really important is to actually get together your team of experts and partner up with people that can actually hold your hand and guide you along the way, because at the end of the day, it's really great to research and understand all of the technical side of property investing, but really there's different strategies that work for every individual based on their individual circumstances. So it's really important to actually just move forward and take some actions, even if you don't know every single thing. You learn as you go, and as long as you're guided by people that have done it or have helped people to do what you want to do, then that will help to alleviate a lot of the costly errors.
Yeah, I completely agree with you. And the sort of question for you is someone with a larger portfolio. So it's at the larger end of what most people probably be sort of familiar with. But how do you go about, what's the sort of effective strategies for you to manage that portfolio? No doubt you use property managers for that bit, but how do you go personally keeping across all those different assets and the status of all those assets and mortgage repayments and whether or not people are up to date with their rent and all that sort of stuff? Like, how do you give yourself the architecture to do that effectively?
Yeah, so definitely I think you need a good property manager, and I have all my properties managed. I would not manage them myself. Also, make sure that you've got good insurance over all your properties. So they're the two key things that I think are not negotiables. In terms of keeping on top of all the properties, I have a monthly check-in with my property manager. So we have a regular monthly catch-up where we go through everything. And we have like a live Google Doc spreadsheet that we're constantly updating between the two of us. So that's a way that I can log in at any time and see where everything's up to in terms of any arrears or any issues that are coming up. But generally, I actually don't spend a lot of time on my portfolio, to be honest, Phil. I have my monthly check-in with my property manager. I get rental statements from the managers twice a month. So I get my payments twice monthly. In terms of all the finance, that sort of looks after itself because, like I said, it's pretty much self-supporting portfolio. So it's actually pretty low maintenance. And my property managers know my expectations pretty clearly. They know what to come to me for approval and what to just go ahead and do in terms of maintenance requests. So we have just set the ground rules and the expectations pretty clearly. So it's actually pretty manageable for me, which is great because I am time poor. I'm run a business, I'm a mum, and my property portfolio is just something on the side that I'm quite happy for the property manager to deal with.
How many different property managers do you have a relationship with?
I've got 3 property managers.
Okay.
So one in Adelaide, one in Hobart, one in Launceston.
So you get them to do the lot. So any asset you have in that place, you get them to do.
That's right, yes.
And how do you go sort of making sure your mortgages are competitive? Are you sort of mainly fixed rate or variable rates?
Well, I guess being a mortgage broker, I guess I have a bit of an advantage of looking at rates, but I actually like to have a mixture of fixed versus variable. I'm actually quite a risk-averse person by nature. So I think that for me, when you have large amounts of debt, it's really important to manage your risk. And one of those risks is interest rate risk. So I think I have normally liked to have a bit of a balance. And for me personally, I've liked to have, 50% variable, 50% fixed. The reason for that is the fixed gives me a bit of certainty as to the interest rates, and the variable gives me the flexibility to utilise offset accounts and make that money work for me in a more flexible way. At the moment, there's definitely some really good fixed rates out there, but there's also some really good variable rates. So it really depends on where you're at right now. Probably at the moment, I'm probably a little bit more variable than fixed. But generally speaking, I do like to have a bit of a mixture, and I do encourage people to sort of think about their risk appetite and their risk profile to see whether they do want to balance the variable and fixed out.
What's your highest fixed rate at the moment on your portfolio?
We're getting like fixed rates under 2% at the moment, which is just pretty incredible.
But in your portfolio, stuff that you've fixed in the past when you thought it was a good time to fix, what's your highest fixed?
Yeah. So I have got a few fixed rates that are, 4.3%, which is a little bit of a shame. But I mean, still, that's actually a pretty good rate when you're considering that the rental return is, 6, 7, 8%. So I think whatever way you look at it, even though it's expensive, and I wish that I wasn't in that fixed rate, I think with fixed rates, you've got to see them as an insurance policy. So it's not about trying to outsmart the market. It's just about having certainty over a portion of your debt and being comfortable that the rate might be cheaper or it might be more expensive in the future, but at least you've got certainty over that portion of debt. So I try not to dwell on the fact that, occasionally we might fix in for a rate that's higher than where the variable might go.
And how often do you call up your lenders where you got variable rates with saying, you're still out of the market, you need to shave a couple of basis points off the home loan? How often do you do that?
Yeah, so for all of our clients, we do that annually. So the same for my loans personally, but we basically offer a free home loan review process that we proactively reprice all of our clients' loans annually, if that's possible, if their loans are variable. And we are finding that at the moment, banks are extremely competitive and are willing to give increased discounts and apply those discounts to our clients' loans. So it definitely does make sense to call your bank and ask them for a discount. The worst they can say is no, but definitely the banks are very hungry right now to retain business and, get new clients. So, yeah.
And how would you actually go about doing that if you're going to call up a bank and say, hey, I'm on this, I need to get it cheaper? What's the best way to get an effective outcome?
Yeah, well, I think that definitely as mortgage brokers, we do have a bit more leverage and to be able to get better rates for our clients when we're negotiating with the bank. And that's just because once we get involved, the bank knows you're serious about leaving. If you don't want to get a mortgage broker involved and you want to do it yourself, then you basically have to make the bank convinced that you're going to leave them. So you have to call their retention team and say, look, I'm going to refinance. I've got a better rate here. Can you match it? And just see if they'll call your bluff. And if they don't come to the party, then you need to be prepared to put your money where your mouth is, I guess, and, actually look at refinance options. And I think at the end of the day, if you are serious about property investing, your investment loans are your biggest expense, generally speaking. So you do need to be proactively looking at how you can get the best rate, because that's ultimately going to get you the best return, which is ultimately going to help you to grow your portfolio faster. So you do need to be prepared to refinance. You do need to be prepared for ask for cheaper rates. And I think you do need to, I might be a bit biased because I, am a mortgage broker and I can see what value we add to our clients. But I think you do need to have a good mortgage broker on your team that will be actively finding, better rates for you, actively finding the right lending partner for you. And that might be a different lending partner every time you buy potentially, or it might evolve as your portfolio evolves. So you need to be flexible and prepared to look at all different options.
Yeah, I echo sentiments. I think any serious investor needs a good mortgage broker on their side to help them get a better outcome in property investing. And, having done quite a lot of mortgages as a consumer, it's an absolute nightmare. And I hate and dread the idea of having why anyone would ever want to do it. Sounds horrible. Go into a bank branch to get a home loan. I think you're mad. Absolutely mad. I got a pretty difficult and complicated situation. No doubt you do as well, Marissa. You probably dread having to refinance because of the amount of paperwork you'll need to do in order to refinance one loan. You've got to provide information across every loan that you have, don't you?
Yeah, well, look, it depends how your portfolio is structured though, because if you try and avoid cross-collateralization, which we always try and encourage our clients to do, then that may not necessarily be the case. And it depends on the bank, it depends on the client, but there are ways to simplify the finance structure. There are ways to try and keep things a bit more separate. And yes, you always do need to declare all your assets and liabilities when you're doing an application, but not all banks will want to see statements for all of your other liabilities that you're not refinancing. So there are options out there, but definitely I think if you are serious about property investing, a good mortgage broker is going to be able to give you more options, going to be able to make it a lot easier for you, going to be able to find much better solutions for you, going to be able to increase your borrowing capacity because they'll be able to look at different lenders with different policies. And generally, most of them don't charge a fee for their service. So, we don't charge a fee. Most mortgage brokers don't charge a fee. So I don't know why people wouldn't use that service. It's a no-brainer to me.
I completely agree. And we'll just sort of close out, Marissa. Give us the biggest theme for 2021 for property investors. What's it going to be?
I think for property investors, one thing that I'm doing at the moment with my property managers is looking to see if we can increase the rent on any of the properties in my portfolio. So if you are currently an investor, you should be going back to your property manager and finding out if the rent is still market rent or whether there is room to increase that rent. And if there is room to increase that rent, when are you going to be able to increase it? Because cash flow is really important as a property investor. I'd also be reviewing your portfolio to see if you've got some equity to be able to grow your portfolio, because now is a really good time to be growing your portfolio. I think there's going to be a lot of good growth ahead. And if you can get in quickly, you can capitalise on some of that growth. Also, if you could look at ways to enhance your properties, add a bit of value to them, that's just going to skyrocket the capital growth even further during the growth that we're going to experience in the near future. So I think it's a great time to be a property investor, great time to be buying property, but you want to get in quick and you want to hold and enjoy the benefits.
That sounds like good counsel. Marissa Schulze, thanks for your time today. I really enjoyed catching up again. Don't be a stranger.
Thanks, Phil. It was really great to be on the show. Thank you so much.
Nice one. Remember to check out smartpropertyinvestment.com.au, social media. Smart Property HQ is where you can find us. You got any questions at all around this podcast or interest in general? We do a lot of Q&A episodes on the Smart Property Investment Show, editor at smartpropertyinvestment.com.au. You'll find us there. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.